Over the last 12 months, the Logan region has seen upwards of 18% capital growth. That means last year, if you bought a house for the right property at the right price, you would have made close to 20%. I've had clients that have had more than that in the last 12 months. In today's video, I want to run through why I still think Logan is such a strong market for capital growth. I want to go through areas where I think there's some growth. I want to go through some areas that I'm a little bit concerned with and I sort of stay clear of, and I'll run you why. And I'll go through some of the projects that's happening in the region. And finally, I'm going to share some case studies on some of the clients that I purchased, not in Logan, but in other areas, and just to show you the results and show you the potential that this region has. So if you're ready, let's jump into it. So really, to get started, we're going to talk about the Logan region projects that's coming through. Like as a snapshot, it's pretty affordable still. So, when I'm helping families that have under $1 million, we end up in the Logan region. It's just, they really need that 4-bedroom, 2-bath, or they need that high set, and you just simply can't get that in Brisbane. And they're happy to make the commute from Logan. It's only really sometimes a 20-minute commute to Brisbane, so it's not out of the way. And there's quite a few train lines and bus lines to get you into the Brisbane. Secondly, a bunch of projects that are coming through. We've got the $2.1 billion Coomera connector. So that's a massive project, and we're already starting to see that come through because it got sped up with the Brisbane Olympics. We also have the $11 billion Yarrabilba. So this is a massive master plan. If you go to Yarrabilba, yes, it's a bit of a hike away, but I'm starting to see real value in the area because what's going on in the Logan region is getting quite expensive. So Yarrabilba is starting to be a little sweet spot, but it's creating a ton of jobs out there. There's heaps of construction jobs. There's heaps of new dwellings coming up, but not enough dwellings with, the between 10 to 20,000 people moving into Logan each year. And there's only 3,000 new dwellings coming up. There's still a big shortfall, but there's a lot of construction going on. We also have the $1.5 billion Crestmead Logistics Centre that's going up. That's a massive warehousing centre. It's going to create a lot of jobs for the local economy and anyone that's living in the area. So it's just making a good area for people to go and rent in. And really, just to wrap this thing up, like we've got $1 billion going into the Logan Hospital. So if you drive past the Logan Hospital, you can see they've already extended it. They're already spending the money on it. And they've already got the project going. So, there's not just 1 billion, but like billions of dollars going into the region. And these are just a small snapshot. There's also a bunch of other stuff happening, but I thought I'd just cover that part off in this section. So let's jump into the heat map and let's start looking at some of the suburbs and the areas, and let's get into it. So when we open up the Brisbane heat map, you can see that a lot of it's looking pretty red now. Most of Brisbane are over $1 million. I think the medium house price now across the Brisbane region is about it's about 860, getting close to 900. Depends. It's on prop check. It's all different, but it's getting close to 900. Let's say that. I'd say it's more than that because most of these areas are pretty red. And as we go down, we got the Logan region right here, where it's looking a bit yellow. So yellow's under 750, and then this is 550. So there's not really many 550s anymore. There's some pockets over in Ipswich, Brindale. I think that might be something that was wrong with that one. And then we've got Sableton. So once we start to look, we can really start to see some of these suburbs like Barinba. I purchased a couple of 4-bed, 2-baths out there for about 500. They're jumping because you've got surrounding suburbs like Karratha and Karawatha and Druvale. And then as you go across this way, these haven't quite hit $1 million, but a lot of people can't afford in these suburbs. So they jump over and they kind of head more towards Meadowbrook and Logan Home, and they sort of cluster around this pocket. Woodridge is probably an area that I haven't been buying for clients, and you can see the price point is much lower in Woodridge, but they have been having some pretty pretty big jumps recently. Like I've seen some properties sell for about 800K that were renovated, and I just not too sure what's going on there. But that's a sort of pocket where I haven't been buying for clients due to low low medium incomes. You know, the rents are much lower. You don't really get a good tenant. But hey, it's actually like right next to some very expensive suburbs. But if you're a bit concerned about getting a bad tenant and trying to reduce the I guess the stress, probably stick away from Woodridge, Kingston, Logan Central. These pockets tend to not be the greatest, but it's pretty funny as you jump over to sort of Marsden and Crestmead, you will get a better tenant. The ratio of owner rocks is like more owner rocks now. There's about 30% investors, so that changed dramatically. Back in 2020, I bought a ton of properties across these two suburbs, and one of the properties I'm going to show you that I purchased just 12 months ago has done really well. So sort of avoiding these little pockets up there. They're great in the sense that they've got the train line and the infrastructure is going in now, like the highways, but the population's growing so rapidly that I could imagine these train lines are going to be pretty beneficial. I've got a lot of clients that are from Sydney and I help them buy properties here, and they're very focused on train lines. And I can't really relate because I've never lived in Sydney, but I could imagine that as the traffic gets worse, um, the train lines are going to be quite handy, and those areas probably will gentrify. But if you're looking for like a 4 bedroom 2 bath, they sort of average around these areas pretty close to 700 to 750 as a range, and then occasionally you can pick up some 3 bedroom 1 baths for about early 600s. The rent returns for 3 bedroom 1 baths range from 500 to 550, and the 4 bedroom 2 baths you can get upwards of 600 to 650 rent. So I think that's going to give you close to a 4.5% yield, which is not too exciting, um, but it's not too bad. Like when you factor in the potential for growth, you could have an asset that gives you $100 a week over the next year, and that's what, 5 grand, and then might only go up 10 grand, so 15 grand in total. Or you can have a property like this that could jump up 50 grand, or even 100 grand in like 2 months. And I can say that very confidently because I've brought so many properties in this area, and we've seen the growth in like 2 months, 3 months, and clients are loving it. Like and one of my examples, I'm gonna show you one property that I purchased for a client last year. She's now leveraged it already, and we're buying her another property. So that's how quickly you can leverage your assets to build out your portfolio if you buy the right property at the right price. Um, so really, to wrap this up, we've got this little back part here. Crestmead's always a good little pocket. Then you've got Heritage Park and Regents Park. These are quite expensive, but just to run you through how the buys work, they sort of come straight down here and they end up in these suburbs, or they come down this little corridor there and they end up down in these little pockets. Um, just be careful if you're looking in these little rough parts here. And just like by be careful, I mean, don't overpay. Don't be the person that did pay 800K. Um, because, yeah, I kind of know the person for a friend, and he didn't have any idea what he was doing, and he paid 800K. He could have spent 800K just across the highway in a medium income. Medium income on this side is like 2 grand, and the medium house price is nearly $1 million. I know I would have parked 800K in this suburb. So just trying to build some awareness around that. Looking at the medium house price, medium income, and the what's going on in that area can help you with a suburb selection. And then when you go in, obviously you want to buy a good asset in that suburb that's going to perform over the long term. So it's not always the prettiest house, and it's generally just a 3 bed 1 bath or a standard 4-2 that really perform the best because you can buy them at the right price. So this is wrapping up this section of the. I'm going to jump into a couple of examples to really paint a picture to you, but finally say, you got Yarrabilba, this is the next master plan, and then the next master plan is Flagstone. Flagstone is ages away from the Brisbane CBD. It's a fair hike. So is Yarrabilba, but Yarrabilba is quite established. So if you go into Flagstone, again, just review how much you're going to spend on that property. If you're going to spend, 700K, you could probably spend that closer to the CBD. It's kind of common sense, but I do see people making this mistake. It's not really a mistake because property is quite forgiving, but it can just slow them down on their property investing journey. So the first property I'm going to show you as an awesome example is this property here that I purchased back in 2019. So the reason why I want to share the story is because I was buying a ton of properties in this area, like the Hills area. It's quite expensive now. Like they're going for pretty much $1 million. But at the time, we were buying them for 500. This one here, I think I got under 500. I got this for 485 at the time, and he went ahead and sold it a couple of years ago for 875, which is insane capital growth. But if he held it, it'd be worth over $1 million right now. There we got $1 million. So, this is the potential that somewhere like Logan has. Even Ipswich, even the Moreton Bay region, if you do your research, that has that capacity. When you're looking at regionals, I just don't feel like they have that capacity. But, if that's where your budget's at, go for it. But if your budget can get you into a metro city, really just don't. I'm not your legal advisor, but just really think about the capital upside, because you make most of your money in your capital when you buy investment properties. The cash flows later on down the track. You can always buy cash flow assets. And then another one that I purchased probably a year later was in Arana Hills again. And we got this one for $550,000. So the market started really to push up a bit, but we got it for 550, and now he could easily sell it for about $1 million. That's his 950. You can't always go off that, but I know he could sell that for $1 million. Reason why I really like this one, and he was an investor from Gladstone. Is that we had this upper level, but then there was a whole nother room downstairs. So he's renting this place out for about. Excuse me. He's renting this place out for about I think close to $800 a week, and just because it's such a big, there's like a few, there's like a couple living downstairs and a couple living upstairs and another person, and he's able to get a higher rent. They all pull together. He's not renting them out separately, and he's achieving a higher rent, awesome yield, and then he's made over 500K in capital growth. So that's the potential within the Brisbane region. And really to wrap things up, we've got this property I got in Marsden. So I got this last year in July. This client, it's not this, and all of these houses I'm looking at, they're not brand new, they're not sexy, they just do the job. People get really caught up with the kitchens and the bathrooms, but like this place was an old 3-bed 1-bath. Picked it up off market for 500 at the time, probably about 20 grand below market value. Since then, she's actually had a bank valuation in July this year, and it came in at 700K. Could she sell it for 700K? I think that might be like pushing it, but the bank's valued at 700K. So she's able to leverage that asset, and now we already have her under contract with another property at 600K. So now she's got a portfolio of over $1.2 million, and she built that in less than 2 years using her first deposit. So that's the power of buying the right property and focusing on capital growth up front, because your capital growth is what you're going to leverage to keep buying assets. If you've got a property that's giving you $100 a week and you go to the bank and you don't have the capital there, they're not going to let you leverage that. So I just thought I'd share that as a final example to wrap up the video. That wraps it up. I really hope you got some value from that. When you're going out there to buy your next investment property and you're considering the Logan area, look at those things that I just shared. Make sure you do your research. And I genuinely hope you do really well in your investment journey. If you got some value from this, please smash the like button or subscribe to the channel. I'm going to be posting more videos like this around Brisbane, Townsville, all the regional towns. I'm going to go through the data sets and really help guide you with buying your next investment property. But thanks for watching.